Greetings traders, Jason here with SwingHigh.com. It is Tuesday, November 3rd, 2009, and we're seeing some sideways chop in the markets today. It can also be called consolidation, which is exactly what I was looking for. Let's take a quick run around the markets. The SPY down 0.55%, that's the S&P 500 tracking ETF. The diamonds, or the Dow Jones Industrial Average tracking ETF, is down 0.7%, showing some relative weakness to the SPY. The NASDAQ, the Qs, down 0.66%, showing also relative weakness to the SPY. The financials, or the XLF, down 1.5%. And the Russells, down 0.3%, showing some relative strength. Just surprising, but we have the NASDAQ, Dow, and financials are leading us lower here today. So let's take a look at the market internals. We have the VIX up 1.6%, above 30. This is a nice sort of a bull flag formation we have here on the VIX. Let's see if I can draw that for you. I drew the bull flag formation there. Those are bullish formations. That indicates that the VIX statistically should break out from here and go higher. Also, you could call this a cup with handle formation, or almost an inverted head and shoulders, but not quite, because this shoulder is a little deformed. Let's take a look at the tick and the trin. The tick is, for the most part, I want to say bullish, but fairly neutral today, which makes sense because we're seeing this sideways chop. As you can see, early in the day we were a little more bullish, and now we're a little more bearish. The trend, neutral as well, started out bearish, but came back into neutral territory. So the market internals and the indexes are telling me that we are getting a consolidation today, which is a good thing. We've had some crazy choppy action, and it's good to see consolidation because that means at least some sort of formation or pattern is in the process of being formed, if you will. One thing I noticed on the SPY 15-minute chart, this is a recent down leg from the 23rd and 22nd area. Towards the end of October, we've had this down leg. I'm seeing this bearish pennant formation, which is bearish. They statistically do break down to the downside, and with today's consolidation, we are making that triangle, symmetrical triangle, or bearish pennant formation. So that will be in the bear camp there. As you can see, we are well below our rising wedge formation. Those orange lines are the rising wedge, and we are down here well below it. I just accidentally removed a support or resistance line. Let's see if I can draw that back in here. Okay, sorry about that. It's a little sketchy. I'll clean that up later though. As you can see, we've had some indecisive days after some sporadic action. We broke below the rising wedge, came back up, found slight resistance at it, and now we're down below it again, obviously. This could be a lower or a higher swing low here forming, because we are losing momentum on the downside. I would not be surprised if we do see a reversal here and make another swing high. Where that swing high is, it's going to be hard to tell. We could find big resistance at this thick red monthly line that I have drawn in here. Also expect to see major resistance at the 107.50 to 108 area. If we break above those, 110 once again will prove to be major resistance. What I would like to see here is a test of the 102 area, and then come back and retest the 108 area perhaps. That would give us a nice head and shoulders formation, and that would be very bearish, but I'm not rooting for the bears. I just want to see a good formation to trade. Thanks for being a part of SwingHigh.com. Check back this evening for your post-market analysis.